belong to Rome. Red, and I'll drink a Modelo. I'll drink a goldfish head, and backing down Sam Summers, and backing down Red Stripe. I'll drink anything from high tank to low cal ultralight. But the bill runs for a sunny day makes everybody feel good morning, everybody. Happy Friday. We'll get started here in just a moment. I'll go back and make your breeze. Yeah, partake in what they made for me. That's me. So they makes everybody feel. Everybody feel. Good morning, everybody. Happy Friday. Looks like the we got today's quadruple witching. Okay. A couple of things that we were talking about yesterday was they tend to investors face this last week and Friday 4.7 trillion triple witching options expiration. Now, I'm just monitoring this number. It tends to be a lot bigger on the quadruple witching per each month when we have contract expiration or the options expiration. Now, quadruple witching is basically where we have multiple options expiring. We have the index futures. Financial products expiring. We have options. We have, the index options on futures also expiring. We have stock options expiring as well. Now, it does for quadruple witching. The term came about when we had single stock futures. But right now, the U.S. markets are not supporting single stock futures anymore. So I guess technically it's still triple witching rather than quadruple. Okay. But we'll go along with the mainstream narrative on it and call it quadruple witching. But good to know. I wish they'd bring back single stock futures. Man, that would open the floodgates for how we could trade those single stock futures in our futures classes here. So, anyway, it's kind of a happy Friday. I started off my session while I was doing my homework with natural gas. Okay. Natural gas, when I started doing my homework, the Globex range was small. It was narrow, down roughly about 7.5 cents. Okay. Now, very often on natural gas, very often, by the pit open, price has moved approximately 50% of the daily ATR up to that pit open. Okay. So using the Globex low, using the Globex high that was there, we project up and we look over to the left and we find our leg base group of candles, which we use for profit projections. We also use those for entries. Okay. So that's where I put my target. I had $120 risk when I put the trade on, taking the breakout point, and I was off doing some other homework and heard order filled and came back and kind of doing a happy dance. So this was a nice start for Friday morning. Okay, right now we have tested that zone. It's more of a target. If you look over to the left, there's missing evidence as far as a place to take a trade short. Okay, so it was just a profit target there. Now we're going to use that first 5-minute candle as our open range breakout trade, putting this all together for the next trading opportunity. The open range breakout is basically taking the first 5-minute candle and looking for the break above or the break below as futures and the physical market come into play. Okay, right now we just have the pit open, so the physical market is open and the futures have been trading in the overnight session. Now, a zone entry for a continued move up would be great. Okay, we had our resistance, we got our buy territory, and we're looking for the buyers that started in between that 7 a.m. and 9 a.m. Eastern, which is about 2 hours starts about 2 hours before the pit open, is where we see a lot of activity as far as what the big traders are doing and preparing for the session open. Now, in anticipation of price pulling back into demand before going higher, okay, I'm going to place an order to take the open range breakout back at going short down to that demand. The projected of this would be in a perfect world, price comes down to demand and then starts going back up. Okay. This is often what we call a reversal pattern or a fresh accumulation of orders that has been put together. This is the picture of where we have potential of the unfilled orders down below. Okay. So I'm going to come back to this in just a moment. Basically the same thing happening over here on crude oil. Crude oil taking that first 5-minute candle, marking the high and the low. We already see that the Globex range is about 96 cents. We compare that Globex range to the daily ATR at 169. Okay, so we're a little better than 50%. But often when we're looking to take the open range breakout trade on crude oil, we notice that when the Globex range is between about 40 and 70% of the daily ATR, that the session at the open is kind of choppy. Okay. Looking at the daily chart, we have a bear flag in formation. Okay. So yesterday was also last trade date on crude oil, and price didn't do what it normally does by pulling back on last trade date. It actually went up. Okay. So I think there's going to be still some settlement here. We also use heating oil as a lead indicator, and right now heating oil is pulling back, okay, in the context of an uptrend. Okay, so a little more risk on this trade. So I'm going to size this position. I'm going to anticipate taking a short trade at the break, okay, using the target down here at 66.83, 66.63. I'm going to keep my position small on this for the open range breakout. Selling short 67.72. I'm going to keep this with a couple of micros. Once I'm filled, I will use 67.95 as my protective stop loss. Now, the potential, it appears that we have about a 5-to-1 reward to risk ratio. The risk is the difference between the entry and the stop using the open range, uh, using that first 5-minute candle, and then using a strategy, the open range breakout around the pit open. Okay. So just recognize and size your position based on your trading plan. Okay. Now, my trading plan says don't risk too much on it. So that's why I'm sticking with just a couple of micros. Now, the potential reward is still very good to the downside, but you always have to be aware that every time you put a trade on, you have risk. Okay. So always understand what your risk is on that. As we are starting off our session on the equity indexes, prices are getting pretty good. Now, this is a light, look at the light volume here. This is not heavy volume, okay? Light volume drop, okay? Now, something I want to point out on the equity indexes is that we have some areas which we have basically a big range of dead space where the market has been consolidating for the last 4 days, and now we're getting a breakout of that range. Okay. If price finds a good solid demand, the move up is going to be strong and consistent. Okay. We want to be able to take advantage of that. So by doing a pre-market routine and studying this price action day in, day out, we form opinions based off of facts. Okay, things we observe, we observe and document them many times so that we can then use it as a piece of information to understand the risk involved in making a trade and also the potential easy price movement back to the upside. Okay, or in this case, upside. Now, as pointed out in our pre-market analysis, we had quadruple witching Friday. No economic reports due out. We did have one Fed chairman come out at 9:05 a.m. Eastern prior to the session open, and then we've seen the markets drop on that. There is some other outside news. The Heathrow Airport also got shut down for I haven't done the other research. I just noticed that it was shut down. I think it's starting to reopen, but there's a lot of stranded passengers. When airports start getting shut down, there's something bigger going on. Okay. And it doesn't always come out and tell you what's going on, but we have seen that when this starts to happen, that nobody wants to call it a terrorist attack, but it really is kind of something like that. Okay. They've been messing with our airlines for quite a while. So when these airports go down, it's time to just kind of be patient, wait. Okay. The markets have, the indexes have had a steady drop. Okay. But I want you to recognize the price pattern. Notice how you have consecutive red candles down, and it's just small red candles going lower, and lower, lower. This is not people selling. It's nobody buying. And as the market starts to open up, as we're still about 15 minutes away from the regular session open, people are trying to figure out what is the news. What's going on? Why is price dropping? That means they're not buying until they have a good reason and understanding of what is going on. And sometimes that news can take 45 minutes to an hour or even longer before it comes out and we have a valid reason. Okay. Now, the banks and institutions do have their orders pending and where they will help control these markets. So we're looking for kind of an exhaustion drop. We haven't got that exhausted sell-off yet, okay? But we are prime candidates on the daily charts for that being below the 50 and the 200 moving average, okay? Now, making reference to that 50-day moving average, okay? A lot of talk about a death cross or the golden cross and so on, okay? Now, when you look at moving average crossovers, often a bounce occurs, like in this case, price going down, the bounce occurs at the time we see the crossover. And it looks like we still have a few more days on the daily chart before we get that crossing, 50 moving average crossing the 200, which they will exploit as that potential death cross. Okay. Now, anytime you hear a term that you're not familiar with, go out and check investopedia.com and get an idea of what that actually means. Okay. The new uptrend will be established once price crosses the 50 moving average first, 200 second, and then you get your pullback. Okay. Now, some of these pullbacks, if you trace them out, you have a drop to base, base to rally, and you have the pullback making a slight higher low than the prior low. Okay. We want to match these pullbacks by using, and you can see right when price crossed here, the moving average crossed, we did see the pullback. Okay. Go back and study these. When using Fibonacci measurements, using the low to high of this, we often see the price pulled back to that 88.6% retracement, okay, for the Fib folks out there. And then that desired move appears, okay? Now we're doing that the opposite way now, coming off the highs where prices cross 51st, 202nd. Once we see that crossover, we will expect prices to move up, okay? Now intraday, sure, prices move up and move down, okay? But it's always good to be mindful of the large time frame and what it needs as well to help with that trend direction, okay? Now the markets keep dropping, and you want to note that the markets are dropping, not selling off, okay? Look at the volume on the Dow 30 stocks. This is a clear indication that they're selling off. Taking a quick look, where are we at here? Over here. Let's also get a good feel for what's going on with the US dollar is right at resistance area. Okay. Looking to break to the upside. Now, this is going to have a negative impact on many of the FX markets that are already at support. The 10 and the 2-year yield have been going down about the last 5 or 6 hours now. The pre-market trend is very low, indicating a more bearish start at the open. There's more down ticks and down volume than over advancing issues, or more declining issues over advancing issues. So the pre-market trend reading is indicating bearish opening. The pre-market NASDAQ indicator, pre-market indicator, QMI is the symbol, or PMI if you're using dollar sign PMI if you pre-market indicator, okay? If you're using brokerage like TradeStation, okay, or charting platform now. The pre-market indicator was developed by the NASDAQ exchange, okay? It has a 92% correlation as to traders' sentiment at the open. The fact that the pre-market indicator is moving lower, okay, it didn't gap lower, it actually gapped up a little bit, but has been selling off, okay. Pre-market indicator is saying, hey, trader sentiment is starting to become a little more bearish, okay. Now, not big bearish because it's just been grinding lower, okay. If you have a strong gap down or a strong gap up, then you have a little more aggressive timing to get into the trade. Now, since the Fed chairman started speaking, the volatility pre-market VIX, okay, has now gone up over $1. This is becoming more bearish, okay? VIX is high, more fear coming into the market. Now, we're still looking, when the VIX starts to trade higher, we're looking for prices to intersect with the demand zone. And for today, we'll look for them to intersect with those demand zones right around the quarter hours, okay? And we'll see if they arrive early into the zone or if they arrive on time. And we'll use that piece of information to help make and apply a trade, okay? But in looking around, dollar looking to break out to the upside is going to be bearish for metals, FX markets, okay? Now, from our pre-market routine or pre-market analysis, okay, these are some of the picks that we have. Platinum is in the zone, okay? We see euros at support, British pound is at support, Aussie dollar also in a demand zone, okay? We're seeing that crude oil may need to pull back to demand on the 60-minute chart before getting that trend back up. We are also in wheat and taking a quick look at the equity indexes. We have seen the breakdown on the Dow, NASDAQ, S&P, and the Russell is now forming a support at this level, okay? Now, we've only put on one trade, and that was on crude oil using the open range breakout trade, okay? And I'm looking to be bearish to the downside. We have another trade that we are looking for natural gas to pull back to demand before going long again, okay? So I'm going to take that open range trade off. I'm going to wait for price to come back down to demand and look for the opportunity to be a buyer, okay? Equity indexes, as we've just talked about, okay, let's just double check and see if futures are oversold. S&P trading down to about 50 points. We have, we have about, well, currently 15 Dow stocks negative over 94 cents. 15 times 2 would be 30, and that would give us a value for cash equaling 30. S&P futures trading, sorry, negative 30, and S&P futures trading at negative 50. S&P futures are oversold relative to the cash by about 21 points right now, okay? At session open in about 9 minutes, okay, look, the whole stock market has not opened yet, okay? All of them, the stocks, and we're seeing also in light volume, okay? But when the stocks, the physical market opens, we will see futures and cash try to balance out. Usually this happens within the first 15, 20 minutes. So the opportunity is if futures become more oversold relative to cash, okay, we will see futures and cash balance out in about the first hour of trading and also towards the end of the trading session, the last hour, hour and a half. The great thing about futures is they trade at a premium or a discount back and forth, okay? It's almost like buying insurance, okay? Insurance at a premium, okay, you're spending more for it. Insurance at a discount, you're spending less, okay? Right now, the cash market equals 30, okay? And the futures are trading at, sorry, negative 30, and futures are trading at negative 52. S&P futures are oversold by about 22 points, okay? Now, that information itself does not say go long now. It just tells you that futures are oversold, trading at a discount relative to the cash market. Now, once the market's open, okay, once the market's open, we want to see futures and cash balance out. If the stocks start to sell off with good volume, then we'll wait for price to become more oversold. And I'm targeting a breakout lower. We're now outside the prior day's trading range. Okay. So price dropping, and I'll look for the first opportunity about 56.17, 56.05 to go long. The timing of this is when price arrives in the zone on the quarter hour, we have a very high probability that price will change direction. If it arrives in that zone earlier than the quarter hour, often you'll get a bounce and then price will accelerate through that zone. Okay. Now, both of those could create a trading opportunity. Okay. Oh, yeah. London Heathrow closed until tonight. Wow. Thank you for posting that, Liz. Yeah, I mean, that is a major airport for many, many, many international flights. Um, and that'll have a huge ripple effect all over the planet. Good thing you're at home, huh? Yeah, Europe's busiest airport. All right, let's get some other charts set up. All right, so we are approaching, and notice the market is just dropping. It's not like selling off. It just kind of slowly grinded. Daily chart, beware that this does look like a bearish flag. We have a strong flagpole down, almost 15% drop off the all-time high, and a slight upsloping channel. So this is a continuation pattern, whereas we might get some opportunities for potential bounce. Our prep screen zone is the place we'll look to go long. Looks like the markets are getting a little more froggy here. We'll target watching for price to intersect right around the open down in one of our demand zones. Okay. Let's see on the S&P. Yep, we're right at that support. 78% of the time, price will bounce off of support or resistance 3 out of 4 times. So we're so close to the open, we might see a bounce back up, okay, before coming down to one of our demand zones. Dow also at support, okay? So you can imagine what a lot of breakout traders are thinking, okay? You can imagine the trap conditions of having a speed bump over to the left-hand side of your chart. Should price break out, accelerate a little bit, and then get whipsawed. So look over to the left on your equity indexes for the speed bump over on the left-hand side. Okay. We're always using and understanding what obstacles may be in the way. And now we just had the Russell breakout, and we have a new sell territory. Okay. Looking down and left. Okay, notice the buy territory down here. Also looking right around in this area, we made a higher low. Adjust your time frame up or down to find your leg base, group of candle. Okay. I'm gonna drop down to 19. Yeah, once your eyes get trained, you kind of know where those areas are, and you just have to adjust it time frame up or down a couple of minutes, and you'll find your leg base. Okay. Once you found it, just return back to the time frame you monitor and watch your charts. Anticipate the zone. Okay, it's not a prep screen zone because of the time the zone was created was early morning. Okay. Prep screen zones, the zones are created during the regular trading hours and they have all the criteria of their location. Okay. As far as having additional odds enhancers to help validate that. All right, so our daily ATR is 51 points, and we are currently about 29, 20, almost 30 points, okay? 2 minutes away from the market open. Where are we at on the NQ? Okay, got a little bounce. Little bounce. All right, now we're just about ready to open, so I'm gonna do this kind of quick. When we're looking at what type of gap is occurring, if we have the flat base, okay, where market has consolidated for a period of time sideways and then price gaps down or up after that sideways, okay, these are more associated with runaway gaps where we don't often fill the gap the same session, okay? If we have a breakaway gap, breaking away from the prior trend, okay, breakaway gaps do have the tendency to come about halfway or midway through that gap, okay? So for the Qs and the diamonds, we're looking at breakaway gaps versus looking at the IWM may be more of a runaway gap, okay? And this will be important for momentum and understanding that volatility. All right, so where are we at here? We do have platinum in a demand zone. We'll look at that after the session opens. The FX markets are moving lower. I'm going to watch the dollar, the 10-year and the 2-year yield. If they start shooting up, we will see some of the other markets, metals and FX markets, continue to go down. We have that perfect storm right now. And we're just waiting for the lead indication of the US dollar to break up, and then that would trigger all the other ones to counter that. To that over here. All right, so session open. Let's see what we can get going here. Getting that bounce. Okay. The area between resistance and support is what we refer to as the dead space. And that dead space does, when price builds a fresh accumulation of orders outside that dead space, price going back through it can be pretty consistent, okay? Pretty easy price movement, okay? So getting a bounce off of that support, NASDAQ, okay? And just recognize that we have a lot of dead space, okay? Observing the stocks. Stocks are kind of quiet here at the open. Bank index, bearish, gap down, okay? So I'm not going to become more bullish, okay, until we start seeing the bank index going back to the upside, okay? Now you don't want to fight the banks. Okay? If the bank index is selling off in the market or at market open, okay, this is 24 national and regional banks that make up this bank index, okay? Bank index dropping implies that we're not looking to fill that to go long just yet. We're still waiting for price to come back and intersect with the demand zone, okay? All right, S&P, NASDAQ, and we do have the Dow. Okay. Now, price intersecting with demand zones on the quarter hour have had a higher probability of being a successful trade. Okay. Now, price is getting extended beyond the 200 simple moving average on all of the equity indexes. Okay. What we're going to be watching for is on these equity indexes, are we making higher low for a potential new uptrend, or is price looking to break the low? Okay. So we're looking for a bottoming pattern structure to come in to play. Looks like we just got filled on the break, the trade on crude oil. Let's come back in and place our protected stop at 67.95. And as you can see, I'm not risking a whole lot. We got about $46 risk to the other side of the open range candle. Okay. You don't have to risk a lot for the potential reward, if you have wide open space down here. Okay. You always want to be looking down and left to find if there's any obstacles. Now, we do have what we refer to as a pocket of points. This is a light volume price move up. These areas often get retraced. We actually witnessed several trades yesterday where this turned out to be a pretty good trade opportunity. Okay. So as price starts breaking lower, okay, I anticipate price to come back down to demand. The added risk today is the first day after last trade day. Okay. So there's going to be a lot of focus on the May contract as the April contract concluded yesterday. Okay. All right, what else do we have? Okay, let's see. US dollar is still holding steady, not breaking up or down. Let's take a look at platinum. On platinum, we're still trading the April contract, which would PLJ 25. Now, I'm going to look for a little more confirmation. I'm going to use gold and silver as a lead indicator. And right now, gold is looking to break this support. Okay. So, not jumping in front of the truck with platinum, using gold and silver as the lead indicator. Okay. We got a new all-time high. And we did hit our projected targets. Over the weekend, I'll do some more study and have better projections or new projections as on the daily chart as to where the next level could be. Okay. So by using gold and silver as an odds enhancer, I'm going to be a little more standoffish on trying to take the trade aggressively long on platinum. Okay. Now, since the new executive order came into play, putting copper as one of those precious metals, okay, for uh, investments, okay, we saw that executive order happened right over here. Okay, we got the initial reaction when that order was being signed. And then we started to see where price started to accumulate, and we've been in an uptrend ever since. Okay. Getting some short-term pullbacks. So right now, copper tends to be the most aggressive one, as looks like traders are starting to accumulate that more. A nice strong uptrend. Okay. Looking for some supply up about 5.27 to 5.34. Okay, this is a pretty huge move for copper. Okay. So in light of using gold, breaking the low, we don't have any speed bumps. Our next 60-minute leg base area is down about that retest of the 3,000, 3,006. Okay. I'm not willing to take this short yet. Okay. because there's still some pretty bullish tendencies around gold at the moment. It looks like the index is quieted down, as we are as well. And we need to wait for our zones now, okay? Today we have a couple of giveaways. And where is that? We have a couple of prop accounts that we're going to be giving away today. The $100,000 account, we have two left. Strongly encourage you, while we're getting familiar with this new administration, is to look and evaluate trading in a prop account. We want to reach out and thanks Elite Trader Funding for having the opportunity to give these evaluation accounts. All you have to do is get our promo code, submit your trade of the week this time. We want to see what the trade of the week is. And you're going to post that in the Discord room and tag the TMI team. And then they will select two more winners off of that. Okay. So get your perfect trade and post it in the Discord room to get a $100,000 evaluation account. Now, I'm becoming a big fan of using the proprietary trading firms. Now, I got my start in a prop firm as well, but things have changed quite a lot to benefit newer traders. Now, yeah, I was trading in a prop account, but we still had some pretty big commissions, or prop shop anyways. Yeah, that's back in the day when the commissions were deep discount commissions, were $40 in, $40 out. Didn't matter if you traded one contract or two contracts or 100 shares, 1,000 shares. Whew. Yeah, back in the olden days, right? All right. Let's take a look around. We got our four indexes out here. Just gonna look at them together to get that overall picture. Let's eliminate some of the noise on here. Still waiting on the Dow. Still waiting on the Russell. Okay, S&P is off of this 2,500 check. Let's jump down. S&P has a price pattern that look at how this is basing up. We might get a good move off of this. Yeah. Okay. We have resistance being formed right now where we have multiple touches of that resistance area. Okay. At the next weekend, we have a Mastering the Charts Part 2 course coming into play. Okay. Now, the Mastering the Chart Part 2, we go into great detail on how to identify the structure inside of a buy territory or sell territory to use as a potential odds enhancer. Okay. Now, we do have two pivot lows as prices met the sellers. Okay. Location of this is got me excited about looking for the breakout, but the price pattern, how price dropped into this, is generally what we're looking for, that drop base drop scenario. Okay, and we're part of a bigger one up here. Okay, So although this looks bullish to take a breakout to the upside, we have a small area to identify as what we call it as a speed bump. Okay. So as price breaks out above this resistance area, I'm going to come back in and based on what I project this price pattern to be, is I'm going to look for a short opportunity once it starts to come back below 56.69. Okay. This transition takes a little bit of time and it does incur some more risk. Okay. Because you're going to have some pretty big price fluctuations. So make sure you size your position properly. 56.69. And once filled, I will use this prior high or the most recent high as my protective stop loss. Wherever that high may come into play. Okay. This is a fairly consistent price pattern. You will learn more about this in Mastering the Charts Part 2. We do have some promotional pricing. Please reach out if you have any questions about that. To get both Mastering the Charts Part 2 and Mastering the Charts Part 1, which is our foundational course. Now, this is going to take a couple of moments before we get any move to the downside. Let's get our stop loss in place, about 56.75. Okay. I have $181 worth of risk and potential once price gets down to demand zone. Okay. I'm looking for that opportunity to be going long right about 56.40. Okay. There's always risk at the start of every trade. If that risk is outside your trade plan, then just give yourself a few moments to wait for price to match up with your trade plan and what your risk is. Okay. Second. Love getting that sunrise. But while I'm doing the show here, I don't want to have a whole bunch of stripes across my forehead. Excuse me. All right. Let's see what's going on in NQ. NQ also making a very similar pattern, not quite all there yet. Okay. I need one more touch. If the market's going to go up, okay, we need to price has to take out the sellers. Okay. Now it's okay that they're not all perfectly aligned. Okay. The better and higher probability trade setup is going to be when price comes down to a demand zone and it arrives in that demand zone on the quarter hour. Okay. So as the NQ starts making this up, notice a strong drop. Okay. Not looking for that trend to start to go to the upside. Now, Tesla is getting a nice little bounce. Okay. And, but we're not seeing a lot of follow through with Apple and NVIDIA. Also, Broadcom, a little bit lower, Meta's flat. Okay. So, a little more weighting involved. Okay. Our crude oil trade, kind of bouncing around. Now, you have to be patient with the crude oil trade, especially when the Globex range is between 40 and 70% of that daily ATR. Okay. You're going to experience some of this choppy back and forth until price starts to trend. Okay. I'm still looking for that down move. If I'm stopped out, I lose $46 on this trade. Okay. I do have the potential and for price to come down to demand. If I am stopped out, I will just re-enter and still go with my original plan. Okay. I'm just not willing to risk more than what I put on the table at this point. Okay. Now gas. Whoa. All right. We are seeing a pretty strong move on gold. What's going on behind that? Let's review our platinum. Platinum actually getting an uptick. How about silver? Silver hasn't broke down. If you're taking a short trade on silver, just be aware that you have a little speed bump. Old resistance become new support, okay, which is where we're at right now. But the combination of this is also implying that we have a flip trade, okay, where price may flip and change direction. We have resistance and support, and when they're aligned like this, we often get that flip, okay, and it works just the opposite way as well, okay. See what I mean about this particular pattern? You got to be patient with it and give it enough wiggle room. Okay. It does have a high probability of working out, but the drama of getting into the trade, okay, and this back and forth, especially when you're so eager to make a trade right now, it can be a little overwhelming. You'll be going, oh, I'm going long now. No, I'm going short now. Well, we can see that NVIDIA and Apple are not correlated as far as a move up or a move down, and the bank index is still bearish. Okay. Now, at any time that P&L makes you uncomfortable and you don't want to take the risk that you initially wanted, you can flatten the trade. Okay. If you do choose to flatten the trade, then please continue to observe so you understand why you flattened it so you can validate that in the future as a good choice. Okay. Look, trust your feelings. If you're uncomfortable about the trade, then take a small loss or a small gain. Don't just sit there and wait for it to nail you. Okay. So I've experienced quite a few of this, so I'm willing to give it the risk involved. Okay. We're not seeing a lot of correlations with the stocks being bullish right now. We're still seeing kind of light volume. Price is just bouncing off of a support on the equity indexes. Okay, we are not in an uptrend yet. We still have the large time frame folks still might be thinking more bearish as we see these bear flags. Okay, nice little bounce off the Globex low. Ooh, a big spike on the trend, but it hasn't closed above 2. Okay. Once you have about and I use 30 minutes as kind of a gauge. Once I have a closed candle above, then it's about 30 minutes, so between about 20 and 30 minutes, price intersecting with the demand zone, we want to look for markets to change direction. Now, the trend represents the NYSE stocks. Futures are going to react based off of what the stocks do. Okay. So it takes about 20 to 30 minutes after the initial reaction on a futures product for the stocks to align. Okay. What time is it? We're almost at that 10 o'clock reversal.
Order rejected.
Oh.
Order filled.
All right, here we go. Now, in a perfect world, price will be down here in 7 minutes. Then we'll have an opportunity to start looking at price to change direction. Don't stop now. Got 7 minutes, keep going down. Now, to help support your decision of that short trade, lean a little bit more on the bank index if it's still continuing to go lower. This is just a short-term profit taking, okay? Then we look for Nvidia and Apple, are two large market cap weighted stocks, to continue moving lower as support to the intended trade. Okay. The start of this is often quite brutal, going back and forth. Okay. Now we're about 6, 7 minutes. What else we got going on here? Okay, so we do have multiple touches of resistance on the NQ, building an accumulation of orders. Okay. This strong drop, though, does imply to me that price will also give us that move down to demand. Now, that would be the perfect trade opportunity for me to anticipate a long entry. Okay. But we do need some help from the stocks, and right now the stocks are fairly quiet. Except for Tesla. Tesla's getting a good jolt. Crude oil trade is still working. We haven't been stopped out yet. And still waiting for nat gas. Pull back to demand. Tempting. Let's take a look at gold. Let's drop down to a smaller time frame. See if we can pinpoint that entry. Oh, looks. All right, let's take that out of the way. Okay, we do have resistance, minimum 3 times. Anticipating this as a buy territory. And I'm gonna make this a little smaller right here, looking for that leg base. Ooh, this is not everybody selling, it's nobody's buying right now, okay? 3,003 to 3,000, we'll look for that bounce. Price going through that area, we will look for about 29.97 as a secondary place, okay? Now, gold often does have, excuse me, gold often has the tendency to overshoot the zones, okay? We do have a fresh sell territory now.
Order
Order
filled.
filled.
I stopped out at S&P. I'm still going to come back in on that. We got the 10 o'clock reversal coming into play. 56.69. And I'll have a new stop loss. Okay. Yeah, just make a little adjustment as price changes. $56.75. And I'm gonna look to participate on the MNQ. And then we'll have our stop loss.
Order filled.
$7.52. Now, I have my stop in place, but I'm not sure I'm gonna let it go that far against me. Okay, so I may step out of that if I feel uncomfortable. Okay. All right, bank index is still trending lower. We might see some acceleration in our price drop. Should
Order filled.
we start breaking that low. In Q, moving lower. Now we just need the stocks to follow through. Now we're not getting a lot of follow through with the stocks just yet. So all waiting for price to come down and find the buyers. Oh, looks like, oh, I got stopped out on crude oil. I'm gonna re-enter that trade at 67.72. I'll reset that one up. And let's get back to gold. All right, gold coming right for us. Oh, that's going to be a beautiful trade. I might get the trade in a week on this one. Remember, if you want that $100,000 prop account, which evaluation count, compliments of EliteTraderFunding.com, please post your chart in the Discord room, your trade of the week. Now, the trade of the week can be, just something that you see or uh, doesn't mean you have to have made that trade. Okay. It just, we want to see what you're posting. Okay. What you view as a picture perfect trade. All right. I'm going to start off with just, 2 micros on this, so that I could add on if price overshoots. Okay. We're looking for that, basically that 3,003. We're looking to see if there's some unfilled orders at that point. And I will be willing to add on at 29.97 should price drop a little bit lower. Okay. Yeah, it's going to be a little tricky today with no economic news coming out. We're kind of at the mercy of the tweets or little breaking news stories and things like that. Okay. So we have to really rely on supply and demand and where the unfilled institutional orders may be sitting. The stock's not selling off. Okay. I'm gonna be a little more aggressive on my stop and adjust it down to about that 735 area. Reducing the amount of risk. Need help from the stocks. Now, I'm not opposed to going long from this area as well. Okay. See, the markets are always going back and forth. Okay. And sometimes they're creating an area where you potentially have a good short opportunity, but you also have the long opportunity. Okay. And it about where the touch is now. The reason I'm changing up, okay, is notice where the multiple touches of resistance are at. They're over on the right, and our low pivot points are in the middle and on the left. Okay. So that's a clue that maybe this is not going to go down to my demand, and I should be prepared to take this long. Okay. Unless I see something else outside of the chart where the stocks are dropping. Okay. I have to plan for both sides of the trade, and using the structures and the patterns, okay, that we're seeing, I can prepare for that. Okay. So in preparation for that, I'm going to be looking for covering my short that we're in right now, and then that 735 half, looking for that breakout to the upside into the dead space for that move up. Okay, so I'm gonna set that up. And this is the beautiful thing about futures is you can set the trade up for both ways. Oops. 35.
Order filled.
Oh, crap, what happened? Messed up. I still want to be short. Jump back in at 703.
Order filled.
There we go. Bank index still leading the move down. Stocks are starting to follow a little bit. Stocks are not being aggressively dropping off, but the banks are. Okay. Kind of like the rubber band being stretched down at this point. Gold is approaching the zone. Oh, this is going to be a good one, Harvey. Let's get a little better picture here. Come on, gold, you're almost there. Profit target on the way back up. About 3,040. Hi, Stephen. You talking about the gold? Yeah, it is in a dead space. Okay. I'm willing to take the risk on this a lot because of the percentage it's dropped, the dollar amount. Okay. Take a quick look over at what the daily ATR is, 39 points. Okay. So right now we are just a little bit extended beyond what the daily average trade range is. Okay. And we want to, at that point, we can expect a bounce. Okay. That missed me by a couple of ticks. But we're a little bit early. Okay. So I'm just going to leave it. I'm going to let this work for my other zone. It doesn't look like I missed it by a couple of ticks. I had it at 3,003.40. Let's give this just about another 4 minutes to see if it comes into play. Going back to our NASDAQ. Okay. Doing good. I'm going to aggressively drop my stop down to about 704. Okay. I've got $4 worth of risk on the trade. At any point you feel good about taking a profit, you certainly can. Okay. I'm going to try to ride this down. Okay. S&P. Ooh, we're back at support. At any time you feel like you want to take a profit, it is okay. Okay. Or you can let it work until it comes down to find demand. Did that help explain what I was looking for on, oh man. See, by understanding what the daily ATR is, and when you start getting stretched down to that average range, okay, you want to be prepared
Order
for that.
fill.
Looking around. Right. Flip the trade back around. Close that out.
Order filled.
And we'll look to, now we're starting to see that, you know, the possibility that the NQ can go up. Okay. You want to be prepared for that. A lot of whipsaw. Notice the volume at each price point is low double-digit numbers. Looks like Broadcom's starting to join the party. And we now have a new support, just basically extending that support over. Yeah, I can't believe we missed it by just a couple of ticks. Let's hope it comes back down a little lower. It was a great entry. It just I had my entry about 5 ticks lower. 6. All right, come back for us. Good morning, Callie. Did you catch the bounce on that one? Now this is this pattern that's forming right now is a drop, base, potential drop. Okay. As we look at price hitting once, twice, 3, 4, 5, 6, often the continuation is a breakout down on the 7th time it breaks out. Okay. So a lot of volatility here, price going back and forth. This also created another dead space. Okay. As price comes down and finds real demand and starts to go back up, we have the potential for a very strong move back up to 57.44 once we find the buyers. Okay. Once you find the buyers. Okay. All of these areas, which I've labeled dead space, are used and filled orders. So we're looking for a pretty steady move back to the upside when we find the buyers. Okay. All right, let's see what else we have on deck. Looks like our 10, 5, and 30-year bonds and notes they've quieted down after a move up this morning. NASDAQ broke support, S&P broke that support, Russell broke it, and so did the Dow. Okay. Yeah, last time we had major airports shutting down, Bitcoin had a pretty strong rally. It's like whoever's doing the shutting down or the wants to be paid in Bitcoin. But you can track every transaction, you just can't find out who it belongs to unless they publicize that. Oh, I don't want to miss this move back. It's got to be a little more patient. Looks like the drama is dried up for let's I'm gonna prepare to go take the breakout now. Since the stocks are not selling off, I'm gonna prepare to go long once price breaks above this resistance area. And it's okay if you had a bearish bias before. I mean, the pattern was right. Okay. But patterns change as the price keeps moving to the right side. Okay. And as they change, you have to change along with them, or you could continue to be on the wrong side of trades, trying to hold on to your bias. So I use a lot of the chart patterns and the picture on the price chart to help me determine if it's time to change. Okay. I haven't seen a real big momentum shift on the stocks. In fact, the last 45 minutes, they've just been going sideways, and Nvidia sideways, Apple, Meta, Amazon, Alphabet, and Microsoft. Okay. Well, I really wanted that short going down there. Let's prepare for the long. 735. Stop loss, 703. We really don't have an opposing supply zone until we get back up to 20,007.
Order filled.
I'm going to put a trailing stop on this of 20 points. Yeah. So if we do get a good spike up, I'm going to reduce my risk on a trade quickly.
Order filled.
Stopped out of the S&P. Multiple touches. If this is going to be a drop-based drop, this is point number 6. Okay. Not ready to take the breakout yet, but I do want to help you see, and this is what the folks will be participating in Mastering the Charts Part 2 next weekend, is that, when we take a breakout trade, okay, we want to look up and left and see what obstacles are there. Okay, we did have a small speed bump. Prices hit that a couple of times. Okay, now we have a nice pocket of points. So there's little resistance if price breaks out to the upside, but I want to put a trailing stop on this as well. I'm going to keep my stop loss pretty tight. Just looking for that breakout and a little momentum behind it. 56.76. And then once filled, I will place a sell trailing stop. In anticipation, get some momentum through the pocket of points. Now the rest is up to the stocks. Obstacles, like a drop-based drop area, these are places where you want to be defensive and observant when price starts to approach it. They can be used as profit targets. Okay. It's just something along the way. Okay. Thanks for that, Callie. Oh, my trailing stop took me out. No, we still booked a profit. Okay, let's see if we can get a pop out on the S&P.
Order filled.
Trailing stop. Now, price coming back down into this area, you need to have your protective stop loss in place, because now we've created an area where all the orders have been filled in this range. And that dead space. Bank index has started to pull up, and Nvidia and Apple have started to move up too, which is good supporting information that price may be moving to the upside. Okay. Wow, we already towards the end of our trading session. Wow. I do want to make sure everybody knows we're going to be talking about our pre-market routine in our little showcase class we'll do today. I'm going to showcase our pre-market routine course and how we gather information. Every day I come in and I get some pre-market tips all of these pre-market tips are things that we're looking at in our pre-market routine. The news, the economic events, pre-market tips like looking at the 10 and the 2-year yield, whether indexes are inside or outside the prior day's trading session. Okay. And we put all that information together. Now, until you're ready and consistent at your pre-market routine, you can learn how to use the one that I'm using. Collecting information is the biggest part of a pre-market routine. And then getting your own statistics to help you make your trading decisions. Okay. Now, generally, the pre-market routine is information gathering. It's not about making a trade. Your trade application will have specific pictures or areas on the price chart where you'll take action and manage risk. So I don't want to imply that the pre-market information gathering is a place you make a trade. Okay. And it's often just understanding what the weather conditions are, the traffic outside of the price chart, what's going to support a move up, what's going to support a move down, and so on. Okay. So that'll start in about an hour. It's just it's a showcase little presentation. So it'll be about 30 to 45 minutes long as we go through some of the highlights. And everybody is welcome to join that. If you need assistance getting into it, just reach out to admin@themarketinstitution.com. We'll gladly help you there. Okay. So a lot of back and forth, really no commitment for a breakout to the upside or breakout to the downside. Okay. So be careful out there. It is options expiration. A lot of folks might be on the sidelines. I think the big news that comes out will be like breaking news, will be a tweet or a post out there. Just be willing to look for the information to validate the move. Well, thank you for everybody. And thanks for all of our students around the world that have joined us. We look forward to seeing you in the showcase, the pre-market routine in about an hour. Everybody have a wonderful trading day, a good weekend of rest, and we'll see you Monday morning.